Ladies and gentlemen, welcome back to the channel. In this video, we are going to discuss a small cap AI stock that is about to explode further. Now, the stock has done very well recently, and I'll discuss why that is. But everything really changes for this company on October 1st. I think it's one of the biggest sleeper opportunities that nobody really knows about. And there is an interesting dynamic with the stock, with the shares and who owns the shares. It's almost making for like an artificial lockup of a substantial amount of the float. And that mixed with the big catalyst we're going to get on October 1st could send this stock skyrocketing. Ladies and gentlemen, the stock that we are talking about is Rezolve AI. In this video, we will talk what the catalyst is on October 1st, which, hint, hint, is earnings, my expectation for earnings, where I think guidance is going to be, how it changes everything for the stock. We'll talk about the lockup, again, my specific expectations, where I think this stock could go after October 1st, and some of the thresholds that I am looking at. We'll even talk about this stock into 2026 as well, because things are going to get interesting, to say the least, next year. And towards the end of this video, I will just share with you some of the biggest news headlines of the day today, so you are caught up to speed for your Saturday. First things first, though, order of operations here. Hit that like button. Number 2, subscribe to the channel. And number 3, check out the link down below in the description of this video if you want to come join the trading community before it is closed off. The trading community portfolio is up 170.41% year to date. I'm not going to, again, like, this is not financial advice. I'm not a financial advisor. This is not a get rich quick ticket, okay? You need to do the work as well. But what we are doing is going out finding small cap AI stocks like Rezolve that are high quality companies in the right field at the right time, but for one reason or another, or many reasons in the case of Rezolve, underlooked and undervalued and underappreciated. We're going out and investing in those high quality companies before Wall Street ever realizes they even exist. Rezolve is a great example, but I bought Palantir on IPO day at $10.51. I bought IONQ at $7. I bought Applied Digital at $3. I bought Novartis Semiconductors under $2. I bought Nebius. I made a lot of videos on Nebius here on this channel, around $22 per share. That stock's $95 today. That was this year. That was back in April. I was buying the hell out of that stock, okay? And now it's Rezolve. In my view, we have a lot of other stocks as well that are hidden opportunities like Rezolve, but Rezolve is the one that is going parabolic these days. So with that said, let's get into today's episode. Okay, so for anyone that does not know of Rezolve, if this is your first time to the channel, I doubt it is, but let me give you a quick backstory. So Rezolve works on a multi-function basis, okay? They're really becoming, to some degree, a diversified AI play, okay? What they do, they started selling operations or their product to companies this year, okay? They spent 9 years developing their large language model. They have a bunch of patents for to prevent hallucinations. For an example, what a hallucination is, if you're looking at colognes or deodorants or something, and the description of that says sandalwood or spicy notes, a lot of AI algorithms are going to pick up on that and start recommending flooring or, you know, just off the wall shit. Like, it'll pull up some garlic salt, right, for a spice or something, okay? That is called a hallucination. It goes off topic to what you are actually looking at, right? So Rezolve has their own proprietary AI large language model for commerce. That's one thing. Commerce is very difficult for large language models to penetrate. They spent 9 years building this out. What they do is they're partnered with Google and Microsoft. So if you go into Google and you type something, right? And let's say their Rezolve is partnered with BJ's Wholesale or Nike, for an example. They're not partnered with Nike yet, but I think that's coming very soon. type in, a winter jacket. And Nike and BJ's, they're going to pop up first because they're partnered with Rezolve. So Rezolve helps to get people onto the landing pages for the websites of the companies that they are partnered with. So that's number one. Number two, once you're on that landing page, they have their sales agent, their chat bot that is very much in tune with AI in retail commerce. So you can ask very specific questions. You can ask questions like what's trending right now with the youth in necklaces or jackets or jeans or whatever you're specifically, referencing. What gift should I get my 15-year-old daughter? She likes pink and, whatever it is. You get the idea, right? So there's that aspect. And then they have the checkout, which once you find the thing you want, you check out. It almost reminds me of like a very quick and easy checkout, something like a TikTok shop would be, or maybe something like Amazon. It's just very efficient in that sense as well. Okay. But even more recently, they have launched their professional services division, in which the company says that this is seeing explosive growth, but it's not meant to be forever. Okay. The margins are 20 to 30% on this, relatively low margin compared to their other businesses, which are 80, 85+% margin. What they're doing with professional services is they're basically partnering. I'm just going to use an example here with Nike, right? That has a ton of products that need descriptions and images and all this. They say, hey, Nike, we can do this for you for a fee. Okay. So they do it all for them, blah, blah, blah. Most of the time, they're probably partnered with Rezolve anyways, so it's kind of a no-brainer, okay? They say that aspect of their business is growing aggressively, okay? And then, so that's the professional services segment. And now, even more recently, as of about 2 days ago, if you are partnered with Rezolve, you can, on their website, click on the camera app. If you're on, let's say, Nike or something like that, you can click on the little camera button on their website, take a picture of shoes. If you're like, hey, I like those shoes, you could take a picture of them and they're going to pop up so you can buy them. Simple as that. I think this partnership could actually be massive. I think like a partnership with Amazon could be in the works. Or Walmart or Target or something like that, a major retailer, because that kind of technology could be huge, right? So that launched about 2 days ago. I think that could have some pretty big partnerships coming along. And Rezolve is obviously able and do partner with different companies on certain things. Like not everyone's going to get the full suite of Rezolve products. Some are just going to get the large language model. Some are just going to partner with them to be higher on the landing pages when you type into Google for a Google search, because again, they're partnered with Google and Microsoft. So there's different, ways that Rezolve is selling to their customers. Here's the magical part about Rezolve from a fundamental perspective. Rezolve said earlier this year they were going to be profitable at about 90 million in ARR, okay, to start the year. They gave a guidance target for 70 million in ARR in the beginning of this year. Well, they came out about mid-year and said that they already hit 70 million in ARR, that they are expecting over 100 million in ARR. That was about midpoint of this year. And they have said multiple times since then that they are seeing accelerated growth. The CEO said recently he's never seen growth in a company as fast as Rezolve, right? The products and the product growth is exploding, okay? So Rezolve on October 1st is going to give us anywhere between 150 million on the low side, in my view, and 300 million on the high side for end of the year ARR for this year, okay? Rezolve has recently highlighted how they trade at a massive discount to peers. Sierra AI trades at 100 times sales. Anthropic trades at 36 times sales. So Rezolve trades about 13, 14 times sales. So there's a lot of room for, valuations to improve from that perspective. If you look at SoundHound or Palantir or, Open Door or a lot of these other companies, Rezolve is basically the lowest one on that valuation list. Part of that has to do with there wasn't a lot of investment in Rezolve from institutions because Rezolve went public via a SPAC. The CEO said that was the worst mistake that they ever made because it really just crushed their valuation. Okay, and now Rezolve is focused on executing and growing shareholder value. Okay, that is all Rezolve is focused on right now. Rezolve literally made a post on their X account that said, hey, we're trading at a fraction of the valuation of peers. Basically saying, hey, we should be trading a lot higher than where we are, which is something I have known for a long time. I'll share my position here in just a moment. But if Rezolve can even get their valuation up to like 20 times sales, right? Which is lower than even something like a Palantir or lower than Open Door, lower than, a lot of other mainstream AI stocks, Tempest AI, right? Lower than a lot of those guys. That's a $6 billion valuation. Today, the stock trades at about $1.3 billion. So, you're looking at a 4.61x from here just based on that alone. If the company comes in with 300 million in ARR, that is a $31 stock potentially by the end of this year. Those are the kind of numbers we're looking at. Now, if it's only 200 million in ARR, which would still be great and the stock would still do very well, if we could get up to 20 times sales, that is a $4 billion market cap, which would be reasonable. That is a 3x from here into the end of this year. That would put the stock at about $21 per share. So I think you're looking at some big upside into the end of this year, and the big catalyst is October 1st. Now, what's going to cause that valuation to go from 13 times sales to 20 times sales? It's pretty simple. Retail is starting to get attracted to Rezolve. Okay. Finally, okay, we were one of the first there, and a lot of you guys, if you watched the early videos that I posted on Rezolve, you were probably there as well alongside us. But now retail is starting to get involved. And I think we're at the very early stages of this, right? For an example, I think next year's ARR target, which we might get some kind of loose guidance for 2026, like the CEO on this conference call might say, hey, if this growth continues as we expect, we could be $1 billion or more for ARR next year. Times $1 billion by 20, you're at a $20 billion market cap. The stock's at a $1.3 billion market cap. That's a 15.38x from here. Without any dilution, that would be the stock at $104 per share next year. Only at a $20 billion market cap. Like, that's not outrageous at all. Okay, this stock could go up exponentially from here. I think you're in the very early stages, even though the stock has went up a lot recently. I do just want to show you some of the recent posts on X from the company, just to get you guys kind of with an understanding of what we're talking about here in this video. This one on September 2nd was one where I was like, wow, I've never seen another company say this before. It says here, Rezolve AI will release its financial results for the first half of 2025 before market open on Wednesday, October 1st, 2025. So October 1st, that is the big date. But they say here in the presser, Rezolve AI to announce strong first half 2025 results, keyword here, and accelerated growth momentum. The company is telling you they are about to smash earnings expectations. That, like, I've never seen another company say that before. Okay, it's incredible. Okay, now we've had a couple conferences lately. Dan Wagner at the H.C. Wainwright Global Tech Investor Conference today. That was big. H.C. Wainwright has the highest price target on the stock, which is $8.50. You don't have a lot of analyst coverage on this company yet as well. So that's another big catalyst that I could see coming. And I do, oddly enough, think that NVIDIA is going to take a stake in the company, like buy the stock. And it's going to be reported on their 13F filing. And that's going to be another big catalyst to get retail investors involved. I thought the same thing about Nebius when I was making videos on it. And then boom, NVIDIA did take a stake in Nebius. The stock was up like 30 or 40% the day that came out. And all of a sudden, Nebius went from an under the radar stock to mainstream retail AI stock. Okay. I think Rezolve is going to have an investment from NVIDIA. That's my opinion. Obviously, that's a stretch and I could be wrong, but I think that's in the cards here. Now, Rezolve on September 10th, this week or last week, said here, Rezolve AI highlights the valuation discount in which it currently trades compared to other high growth companies in the AI sector. At present, Rezolve trades at approximately 13x ARR. Keyword at present, because October 1st, that is going to change massively. It says compared with Anthropic at 36.6x and Sierra AI at 100x. Rezolve recently said that, Sierra AI has 100 million in ARR target, and they're trading at a $10 billion market cap, suggesting Rezolve is significantly undervalued. Now, one thing I really love about this company as well is they keep investors, they have a lot of news flow. Like whenever they have something to share, they do. Even when they don't, like the valuation discrepancy. Like that's I love that a company is very active with the investment base. And you'll know why in just a second, but it says here Rezolve AI is excited to announce the launch of visual search, a transformative capability that allows consumers to point their phone camera at any item and instantly search across a Rezolve-enabled retailer's catalog. So I think this is going to drive a lot more partnerships just for this capability alone. Okay. And then Rezolve on Friday said Rezolve AI is pleased to announce that institutional ownership has now surpassed 10% of its cap table, following a surge of new positions from some of the world's largest and most influential funds, including Citadel, BlackRock, Vanguard, Jane Street, Northern Trust, Man Group, and State Street. Okay. This is what I'm talking about with a lockup. So institutions now own 10% of the stock. So let's put that into the calendar or calculator. 10%. Private companies own 14%, and insiders in the company own 40%. That is 64% of shares that are essentially like locked up right now because institutions are just trying to buy the stock. Okay. They started at about 5% ownership back on about August 17th. So in the last month, they bought about 5% of shares outstanding. Well, retail investors were 40% ownership in the company. So that's probably went down maybe a little bit. But of that 40%, there's probably 20% of the float that are real believers in the company. So from my estimates, there's likely 80 to 85% of the share count right now that is held in people's brokerage accounts where they have no plans to sell the stock anytime soon. That a lot of people, Wall Street, private companies, the leadership, and early retail adopters, not the traders that are just getting in and getting out, but the early guys like myself and some of you guys that were involved in the stock in the $2, $3, $4 range are like, hey, this is a real like multi-year winner on our hands. I don't think there's a lot of selling pressure right now, even though the stock has went up a lot. Even just insiders owning 40% of the shares, that's one thing that really drove me to this company is there is high degrees of confidence in the company long term. Okay. So what happens when you have 80 to 85% of shares locked up? Well, for an example, the stock can go up 21.65% only on 29 million shares in volume. Like Rezolve is not a Main Street, AI stock from a retail perspective yet, but you're going up 20+% on 20 million in volume. What happens if NVIDIA takes a stake in the company, or on October 1st, we get that big guidance raise, which I think is coming? You're going to see a massive volume influx, and there's just not going to be that many shares available. So you could see an exponential rise in the stock very quickly. Like, this is not one to play with. when you have such a degree of shares locked up. And it's not something that is obvious to a lot of people, right? You really have to have followed the company and have a deep understanding of the company to even realize that a lot of the float is locked up right now. Okay. Now, could people sell? Of course. But is institutions going to sell? They're just now starting to get positions. I don't think so. Most of them. Are insiders selling? Yeah, I don't think so. Okay. Just based on the way they talk. Early retail adopters, a lot of them are not selling, like myself included. There's a dramatic amount of the float that is locked up right now. Okay, so that is exciting. Now, Rezolve, you can see this here. It's actually represented when you look at the shorts component of this this stock. So cost to borrow fees are a good way to understand how many shares are actually out there and the fees associated with it. So the cost to borrow minimum 63%, cost to borrow max is 237%. The cost to borrow average fee to short Rezolve is 97%. Okay, now this is on a day-by-day basis, so divide that by 365 days, and that's the fee that you're paying every day to short Rezolve. Okay, but with the cost to borrow fees this high, okay, and they've been high basically forever. They were like 70, 80%. They went as high as 300%. Now they're back down to 94% of the cost to borrow fee average. Okay, but it shows you there's not a lot of shares outstanding. Utilization at 80%, short score at about 77. You do have 9.22% short interest off free float. This has been climbing up. And I do think after October 1st, again, a lot of Wall Street, they just short shit. Okay, algorithms short these kind of stocks as they go up. But if they short these stocks that go up, they're not paying attention to what's going to happen October 1st. And once we do get that big guidance raise, which is like I don't want to say a certainty because nothing is ever guaranteed. But if they didn't massively raise guidance, if they don't massively raise guidance on October 1st, I'm going to be scratching my head a bit. Like, what the fuck? Like, what did you say? What was all that about? Like, it wouldn't make any sense. Okay. And I think a lot of this is just algorithmic selling pressure. We're in September. It's a weak seasonal month, right? And there's algorithms out just shorting indiscriminately. And I think that's what's really going on here. And this is happening into a massive catalyst. It's going to spell disaster for the shorts. And it's going to mean a big upside move for Rezolve. And again, I think the stock by October 10th could be a $20 stock. I know I had a $20 target by the end of this year, but the more, that keeps happening, the more I think about the ownership structure, you could see an exponential rise faster than most people think in this stock. Especially once you get above $14.50, that could bring in a whole new round of buyers, because that would be a new all-time high from an algorithmic perspective. That's a great sign as well. And again, even once you get to like $10, $20 a share, you're only going to be at a couple billion in market cap. I do think to the downside, there's one or two big risks to this company. At some point, like if the stock hits $20, I think you're going to get some dilution, right? $20 to $30, you're in risk for dilution because the company is growing aggressively. Like they're going to raise capital at some point. So that's a risk you have to, calculate. I don't think dilution's coming anytime soon though, right? Not at $6, $7 a share. The company has said they have plenty of cash. They don't need to dilute shareholders, blah, blah, blah. And then the second biggest risk I see with this company is getting bought out. Now, I think the buyout price would be substantially higher than where it is today, but I think the stock by itself has a lot more opportunity to do well and go up a lot more than if they were to get a buyout. And I mean, when that's one of the biggest risks, normally you have a good company on your hands. So let me know your thoughts on this down below in the comment section. Again, the RSI is at 88.61. Next week, we get a rate cut. A lot of Wall Street has talked about this whole, sell the cut kind of narrative. That could happen, and you need to be prepared for that if it does happen. If we do get a little bit of downside, I don't really care. Again, like, who cares? I know the company I'm investing in, and whether markets want to freak out in September or not, it means nothing to me. In this portfolio, I have a current value of $74,793, up $44,035, up 143%. Invested for 85 days, 11,000 shares here with an average cost basis of $2.80 a share. In this portfolio, I have a market value of $88,392, up $52,000, up 141.5%. Average cost basis $2.82. 13,000 shares invested here. Options, I have $6,300 worth, up $4,700, or up about 300%. And again, I have no plans in selling anytime soon. 26,300 shares total that I just counted for you, including 1,000 shares in Thinkorswim and 1,300 shares in Webull that are just not even worth like showing. These are the two large positions, and then with those 1,500 shares equivalent in options, I have exposure to 27,800 shares times $6.80. That brings the total net exposure to this company at $189,000. I have no plans in selling anytime soon. So we'll see what happens. Let me know your thoughts on this down below in the comment section. Have a great rest of your day, and I will see you in the next one.